So move it. GM. Saturday. 15th, 16th? 16th of December. And I see that some of you are shorting. Don't fucking short. I'm extra angry this morning because WorldCoin pumped. Literally, to the 1 minute chart, I looked at it. What time is it now? Yeah. Literally here. It's like, oh, WorldCoin looks good. I should buy some. Went and had a shower. Come back. 20% up. What an amazing market. But that's a good example. And I'm extra pissed off because I longed it yesterday. Closed the long because of high funding. Woke up this morning. Funding had come down. Funding was cooling off a bit. And I was like, excellent. Funding cooling off. Some of the apes are gone. But anyway, I'm not salty. So, this is a good example of why you don't need to fucking short in a bull market. I don't know how many times I'm going to have to say this, right? And I'll even go so far as to say, day trading, you probably shouldn't even short. Scalping, you probably shouldn't even short. It's like, oh, but what if I have a system tells me? Sure. If you're in blue belt and you're dollar trading and you're testing, I guess so. But, and I've spoken to many people, and I know this. Like, everyone who's running systems with shorts in them at the moment is losing. Right? So your shorts are just going to lose. They're not all going to lose, but I fucking guarantee you, because I've traded through bull and bear, I guarantee you that when you get to the end of your 100 trades, your shorts will perform worse than your longs. So if you've built a system and it's both long and short, cool. You can keep running it, I guess, or you could go build a long only system, which I would suggest. Because just look what WorldCoin did in like the time it took me to have a fucking shower. Right? And that is all over the market, all day, every day. There is opportunity. On the long side. Because look at WorldCoin again. This is what you don't understand. And if you don't understand it, I'm about to tell you. If you do understand it, well, then you shouldn't be shorting. Because we're not in a bear market anymore, things are going to tend to go up, which is a low, a high, a higher low, a higher high, a higher low, and so on, and so on, and so on. So you might say, oh, well, look, didn't it decline here? Couldn't I short that? Oh, look at this big sell-off, didn't it? Yeah. Easy to look at the chart in hindsight and say, hypothetically, yes, I could have shorted here and closed there. But you didn't and you wouldn't. And what you need to understand is you are shorting into support every time. Because there is always somebody who is waiting and wanting to get long. Because it's a fucking bull market. Eventually, there's going to be a big correction and a sell-off in the market. But again, given that it's a bull market, that is not going to look like you think it is, and you are not going to make money shorting it. And I say that because that is just the highest probability outcome. If you look at previous bulls where we've had big sell-offs, right? This was a big sell-off. Market really got wrecked here. Not shortable. It was bullish all the way here, right? Bullish, bullish. Even this sideways inside candle, not bearish, didn't sweep out the highs. Then all of a sudden, boom, big nuke. And that already was most of the down move. From the top of that candle to the bottom of this one, it went down 27%. 16 of that happened in one day. Right? Most people would not have got onto the short train until here. And they ended up being in a wick, liquidated. Then it grinded back down, not impulsive, not good conditions for shorts. One final move down, chop sideways, everyone tries to short again, short the bottom, short the bottom, short the bottom. Forgetting that we are in a fucking bull market and people are willing to buy and waiting to buy. Look at this one. That's not a shorting opportunity. That's a buy the dip opportunity. Just get it out of your head. Just get it out of your head, honestly. I'm really adamant about this because I don't know anybody who makes money shorting in a bear market. Bull market. I don't know anyone, and I know amazing traders. Millionaires, all of them. Successful traders, all of them. And I don't know any of them who make money consistently in bull markets shorting. That's not because they're not good traders, they're excellent traders. But because they realize that you play the market you're in. And they switch to long or cash. Occasionally they might take a short to hedge, but that's an advanced strategy really. And not something you should fuck around with. Right? It's just like, I don't know how many times I'm going to have to keep saying it, but I will just keep saying it. If you're bearish on the market, go into cash so that when the market goes down, you've protected your gains. You've took profit. That is excellent, smart, good. It will then give you the benefit of being in cash, not short, so you're not biased. Instead of hoping and praying that we nuke further, which we won't, you can actually start to look at, how do I buy more? Where can I buy the dip? Where can I get in? Where can I load up on my bags? And you can be exposed to all the beautiful upside, such as coins like this, which I've been in since over here, after 2 red candles, where it looked bad, it looked bearish, and then it bounced up and then it grinded all the way down. Would I short that? No. Look at all that. This isn't possible. Literally not possible for shorts. I bought there, it's now here. That's 371% on spot. That is impossible for shorts to do. And this isn't even that big a move compared to some of the stuff that's been going off the past few weeks. So, while yes, all of this does indicate the market is getting very heated, it does not mean we have topped. If you haven't traded through multiple markets, bull and bear, you might think that everything is like a top signal or it's all over or it's all this or that. It's not. Right? It's not. This is just the market we're in. This is crypto. This is just how it fucking goes. Excuse me on the noise. This is just how it goes. Right? Look at Bonk. Again, from the bear market lows. 150x. And yet people, this morning, I see, are trying to short this. Guys, it's fucking retarded. Because this is your invalidation. And this is where price is now. It's 30% down off the highs. If you manage to short it up here, somehow, that is a good entry. If you are down here, it is not a good entry. Because your stop loss must go above the highs. Otherwise, you are handing your money to the market. Because you might say, oh no, I'll put my stop loss here, above today's high. Cool, good luck, you'll be stopped out in a few hours. And what's your upside? 0? Nope. 90% down? Well, it's already down 30%. So if it goes down 90%, that would take us down to here. That would give you a whopping 1.74 hour trade. You could make 10 of those in your sleep by just going long. By just being a little patient. Buying after corrections. Getting long. Because guess what? Once bonk goes down 50%, right? That's actually a good time to buy. And I will be looking to buy if it goes down 50%. Not because I think it's going to go to new highs, but because that's a very typical place to have a nice bounce from. And it might bounce up there, grab your stops, and then go on down. Right there. If it goes like that, the actual trade is to buy it, not fucking sell it. Shorting in a bull market is ego-driven, whereas you could get a lovely 57% bounce with extremely low risk, because if you wait for some low time frame, you know, whatever your entry trigger would be, and you get long around there, and you define your risk, wherever that would be, you could have a 2.6, even if you went wider and went to that 1.7 that I talked about, there's a better 1.7R. No leverage required. You're not going against the market by shorting. And you could just simply buy some spot, let it rally up 50%, and take profit. And that happens over and over and over again. The beauty of something like bonk that is so hyper volatile, I need to set that alert for the 50% drop, by the way. The beauty of something like that is so volatile is that even on low time frames, the bounces are fucking crazy. If you had bought the 50, just blindly bought the 1 hour 50 MA touch, 50 EMA touch, right? It bounced 17% off that. Depends where your invalidation would be, but it shouldn't certainly be that tight. So you should still have been fine, even if you just went for a 2 hour, flat 2 hour, up to the resistance, 17%. Now these are hypotheticals. The point I'm making is, you can even as bonk goes down, you can make money long. Because even if it fucking nukes down to here, it can easily have a 20-30% bounce and just keep nuking. That's a nice 35% off the 200 EMA, up to where the 50 would be. Opportunity is fucking everywhere on the long side at the moment. We have not sat through 18 months of shit just to start shorting now. You are literally 18 to 24 months. It's actually 24 months now. We topped in December of 2021. 2 years. We literally have 4-year cycles. We have done 2 years of bear market. What is most likely to happen in the next 2 years? 2 more years of bear market, which has never happened before? Or at least some, like 1 year maybe, of upside. If we top in late 2024, that will be seen as extremely bearish. That will be a full year earlier than normal. 2024 is the halving year. We have never had a broad market top in the halving year. It's always came after. So even if we topped this time next year, 12 months from now, that would be seen as a very weak bull market. That is still 12 months now where you can make money on longs. And the beauty of crypto is that it's so volatile, you don't need to use leverage.